Hi, Steven. Thank you for my office.
Thank you for inviting me, Michi. It's good to see you again.
Yeah, today I have something to tell you. I have my important plan. I drive to buy one company. Oh, as you know, I love traveling, right?
I do, yes.
Yeah, I've been to many countries, United States, China, India, and Peru. If I purchase a company of the traveling industry, it can be a very big chance for our company. How do you think about that?
I think that's an interesting idea. We are datascrapers.com, and it does purchasing a traveling company would make sense because we want to acquire data. Also, with the travel industry at a low point right now, it might be a good opportunity to purchase. What's the company name again?
Booking.
Booking.com. Okay. I think that's a great idea. I'll tell you what. Let me go and look at a few numbers preliminarily, and then I'll meet with you in a few hours from now, and we can talk about whether we want to take it further. Okay?
Thank you, Steven.
Okay.
I can't wait.
Thank you, Michi. Hey, President Michi. Well, as we discussed this morning, I took a look at Booking.com a little bit in more detail, and I'll just share a few things that I found.
Thank you.
I didn't know that Booking was a holding company, and it owns Kayak, Priceline, Agoda, OpenTable, and RentalCars.com.
So many services.
I know, so many. So I also compared it to Expedia, another holding company, and I found that the return on assets for Booking.com was 23% at the end of 2019. And I compare that to Expedia, which was only 3.6. So then on return on equity, 82% for Booking.com.
82?
82% compared to only 10% of Expedia.
Okay.
So, and then the thing that I think you're right. It's a really good time to look into purchasing Booking.com, because on January 10th of this year, the stock was at its all-time high of $2,094 per share.
Oh my God.
I know, and just 1 month later, it had dropped to half of that. So it's a really good time to purchase if we think that's a good opportunity.
Yeah.
So I will have the financial team take a look into it with more details, and we'll meet next week and go through it. Does that sound okay?
Thank you.
Okay.
Yeah, let's do it.
Okay, thank you, Mr. President.
Thank you.
Nice one. 2 hours later.
President Michi, thank you for having us.
You're welcome. I was really looking forward to attending this meeting. I was so excited. Come on, guys, give me some useful information for me.
Well, as we talked about, our financial team went through the numbers and have prepared some information for us today. So, Liz, would you like to get started?
Okay, sure. Thank you, Steven. I checked the income statement of the company, and I found that Booking.com really did a good job during the past 5 years. Their revenue and also their net income increased every year, and they have the largest market share, especially in Europe, which reached about 67%. And also their net income margin is also the highest within the industry, which is about nearly 20%. But since last September, the revenue and also their net income declined. You know, last September, the pandemic is not coming, and they really have, and this year, after the pandemic is happening, they really suffered a big loss from their net income and also the revenue. So I don't think it's best time to buy Booking.com.
Oh my God.
Yeah, for this moment.
Okay.
Okay. Thank you for that, Liz. We were also really interested in the equity ratio. We found that quite interesting, how it was so high. Vedant, can you explain a little bit about the earnings per share?
Sure. I think, when you mentioned that the earnings per share was so high, that got me intrigued. I think I started looking at the reasons behind why a company like this, who's probably doing plateauing in some ways, as Lynn mentioned about the sales and everything, how their EPS was going up so high. So I think I try to compare it with some of the biggest competitors, or what should I say, the biggest companies on the index as well, and it's like 4 or 5 times higher than the biggest ones. We started digging into it, and I think this process has probably started in 2015 when they started buying back their shares and loading up on the treasury stock. So every year I see that they have been purchasing at least $1 billion worth of treasury stock that is going into their accounts.
That sounds like they're trying to inflate their stock price.
Exactly. I think that is what we're trying to understand. Their stock prices were at a decent level. It was increasing year on year. Because of that, I think they have been trying to just make sure that it is at a good level that talked up, because they have almost purchased 16 billion worth of treasury stock in the last 4 years, which indicates that they have been just eating up their investment. If you see the long-term investment, that has drastically come down to a third of what it was, and their short-term investment is literally off the balance sheet, so they do not have any short-term investment at this point of time. All they are relying on is what they have on the balance sheet in terms of retained earnings, which again would go down because the business is not doing well. So everything will be washed off, and we will not have anything on our books which says anything good about the company going forward. So I think it does not look like a very viable option because the balance sheet is not strong enough.
And talking about that, it's also good to mention, we found in the notes that they have 2 major buildings that they're in the process of constructing, and then they will have to furnish them out. One is their new company headquarters in the Netherlands for Booking.com, and the other one is in Manchester for Rentalcars.com. So they're making a huge investment, a huge liability that we're going to have to pay for these buildings.
Are people even going to be using office buildings in the future?
And that's another good point. We've been doing most of our meetings. This is the first time we've been together for a long time. We found that working remotely works well, so it's a good question. Are we going to have people to put into these buildings? It's a very, very big commitment.
Yeah, and I think liabilities, the assets brings in liabilities. We have a lot of liability that will come on with these assets, and we have also seen that the liabilities and debt numbers have recently gone up to a level where the debt equity ratio has come to almost 2.3, which means they have double the amount of debt which they have equity for. So we can see that year on year that debt has been increasing, and they just got a 4 billion worth of debt this year just to fund themselves and make sure that they sustain. And we have at least $1 billion worth of debt which is payable every year. Going on the reduced earnings and these committed payments, it will be a negative balance sheet for the next 2 years. We will not see any green coming in. So I think in terms of opportunities, we have also started to do our due diligence on seeing what opportunity this company has other than just what is in their balance sheet. The balance sheet does not give us a healthy number as we see. And in terms of the opportunities that we are seeing with the competitors and everyone who is growing in this sector, I think their competitors are okay. They have been growing fine. They have been the leader in growing, but we see other competitors coming into this sector, and those start to pose a higher risk. These competitors, once they are in the market, they could literally wipe us off.
Yeah, because why couldn't Google just do exactly the same thing?
Exactly.
Yeah.
We are a data company, but we know who are bigger than us. Google, Facebook, Alibaba in China, they have all the data, and they can mobilize it to probably make sure that they get the traffic going onto their website. And I think we were discussing about the fact that their marketing expense is so high because they are probably the highest advertisers on Google.
Of course. Besides the debt, and they also have the very high operating expenses, and we can see their operating expenses including the sales and the general and the administrative expenses, and also they have personnel cost, depreciation, amortization, and also for the information technology. All these costs is very high. And as I searched that from last January till this January, during the whole year, the Booking.com they spent on SGA expense is about $7,000 million, which is the highest. And compared to the second one, Expedia, their SGA cost only $4,000 million. So Booking is about $3,000 million higher than SGA.
And I think they're just dealing in volumes, and the pandemic is bringing down the volumes already. So we think that it would take about 2 years for them to probably come back to the levels that they were operating, and the balance sheet does not support a 2-year period where where their revenue numbers are down by 90%. So I think in terms of all the ratios, the numbers that we have seen, it does not add up that we should buy a company like this at this moment or anytime in the future as well.
Yeah, we were very excited about this opportunity,
Yes.
and the initial numbers look really good. But I think our finance team has done a very good job of
Yes.
at pointing out the risks for us.
Yeah.
And at this moment, we feel collectively that it's best to not buy it. What are your thoughts?
Actually, before this meeting, I wanted Booking.com from bottom of my heart, because all my life I got everything I wanted: money, big houses, luxury cars, beautiful girlfriends, everything. But this time I have to give up purchasing Booking.com.
And I think that's the wise decision.
Yeah.
Yeah, thank you.
We cannot
Thank you very
waste
much
our
for your
time.
useful information
Yes.
and helpful information for me. Yeah, I will change my mind.
All right, thank you for your time.
Thank you.